Welcome to the Joe Gomes Academy. My name is Joe Gomes and today I will talk about the aging report. Today, we will see, what is an aging report? Why is an aging report help your business? And some considerations about the aging report. An aging report groups outstanding invoices into date categories. The categories are usually current or not due, invoices that are within terms, 1 to 30 days, invoices that due within the next 30 days, 31 to 60 days, invoices that are 31 to 60 days past their due date, 61 to 90 days, invoices that are 61 to 90 days past their due date, greater than 90 days, invoices that are more than 90 days past their due date. The first step you should take when you receive your aging report is to work back from the oldest invoice and try to obtain immediate payment. The monthly collection activity should focus on increasing the percentages on the left to the detriment of the right. The bigger it is on the right, the more likely the company will not receive the amount owed. Some benefits that the aging reports provide are: contact clients at regular intervals so they know you're on top of your billing and collection process, evaluate payment terms with suppliers and make necessary changes. Sever ties with clients who regularly struggle to pay their invoices on time, which in turn can lead to cash flow problems for the business. Stop providing goods or services before late payment becomes an issue and you have to write off bad debts. If you decide to factor your outstanding invoices as a financing tool, one of the documents your factoring company will require is an accounts receivable aging report. It is used to help determine the factoring rate. Without an accounts receivable aging report, it can be difficult to maintain a healthy cash flow and identify potentially bad credit risks to your business. While generating the accounts receivable aging report, make sure to include the client information, status of collection, total amount outstanding and the financial history of each client. There are 3 considerations that we can withdraw from the number of invoices in each bracket and the total amounts outstanding in each bracket. The first consideration is about credit risk. Older invoices represent a credit risk to your company because, if customers haven't paid, one possible reason is that they are unable to. Compare your overall accounts receivable aging against industry standards to determine if the amount of risk you're taking on is appropriate for your industry. Also, if some of your customers are much slower to pay than others, consider whether you should adjust the terms of your agreement or stop doing business with the slow payers to lower your risk. The second consideration is about the collection practices. Sometimes, older receivables are a sign of weak collection practices. Check your collection routine. If you don't have one, create one. And be sure that you are following all the steps of the collection routine, especially when the customer is taking longer than average to pay. Finally, the third consideration is about the bad debt allowance. Our balance sheet should only reflect 100% of accounts receivable if you are reasonably certain of a 100% collection rate. If not, bad debt provisions and bad debt write-offs are to be made in full alignment with accounting standards. If you want to learn more about account receivables, follow us. Share and subscribe our channel to stay informed of the latest contents and enroll our courses on the links below.